there, Holly Shields here for Kalkine Media. Let's talk technical analysis. What are the components? But before that, please sub to our channel and press the bell icon to get notified on our latest videos. Technical analysis is a vast and comprehensive approach to analyze a trend of security or any other asset that is freely tradable in a market. It is a disciplined approach which helps to identify profitable opportunities to trade underlying instruments. Technical analysis is a totally different thing from fundamental analysis, as the former uses historical price and volume data as its main input, and the latter uses financial statements and other fundamental data. Despite the two being diverse approaches, both forms of analysis attempt to answer a single question: whether the underlying security is likely to move up in price or fall. To effectively apply technical analysis, an investor needs to understand the basic components to help make an effective approach. Now for some of the components of technical analysis. First up is price and volume data. Like fundamental analysis, it incorporates a company's financial statements, industry's outlook, and economic conditions. Technical analysis primarily uses two data sets, i.e. price and volume. These are the most essential components of technical analysis, without which the analysis could not be performed. Price data consists of actual prices at which the buyers and sellers of that particular security agreed to transact. There are many transactions that take place throughout the day, week, and month. Therefore, these prices are regularly tracked and analyzed to gauge the trend of the security. Volume also plays a key role and is a measure of the degree of participation from masses in underlying price change. Volume data measures how many shares or contracts have been traded in a specific time frame. Next up is charts. The price and volume data comes in humongous volumes, as there are countless transactions taking place every day. Therefore, it becomes a tedious job to analyze all the data in its raw or even tabular form. One way to overcome this problem is to summarize this data and plot it on a chart, which gives a graphical representation of that data. This visual representation of price and volume data then becomes the basis of technical analysis. The prices are summarized in the form of 4 data points, namely open, high, low, and close price, for the security within a specific time frame. These 4 data points incorporate all the prices at which a transaction took place within the respective time frame, and the analysis is performed on these 4 data points, eliminating the need to analyze every single transaction. On this chart, numerous studies or tools or indicators are also plotted to perform an even deeper analysis. Another component is indicators or tools. An indicator is the basic mathematical calculation which is performed on the price and or volume. It helps to interpret the same data from a different dimension. For example, looking purely at price charts, it would be difficult to calculate how far the prices have trended and deviated from their mean. This calculation can be done by using an indicator that calculates the mean price and then compares how far the price has deviated from the mean. This could be used for a different form of analysis, such as gauging the overbought, oversold levels. Technical tools such as trendlines, Fibonacci retracements, and projections, horizontal support and resistance lines, etc. are very commonly plotted on the price chart to find trends, support, and resistance, as well as projected targets. All these indicators and tools, when plotted on a price chart, interpret the data in a graphical visual form, which is not achievable on the dataset, but in a tabular form. And lastly, remember, it's art as well as science. Some of the components of technical analysis are subjective in nature, and some are objective. Therefore, the subjective components are more of a set of an art, and analysis of which is to a great extent dependent on the knowledge and experience of an investor. An example could be a chart pattern analysis. In the financial markets, rarely one would see a picture-perfect chart pattern, which is often showcased in textbooks. Therefore, an investor needs to use his experience and judgment in gauging the legitimacy of the chart pattern. Depending upon the location, chart volume, and data, how much the margin of deformity of the pattern is allowed by the investor to still consider it valid. There are objective components of technical analysis as well, which help to remove ambiguity from the analysis. For example, to gauge the current short-term trend, an investor can plot a 20-day moving average of price. This setup has only two implications. If the current price is above the average, the trend is interpreted to be upwards and vice versa. Therefore, plotting a moving average helps to remove the subjectivity in trend analysis. And that concludes our list. If you like this info, please like, share, and subscribe. Comment on the video, give our channel a sub, and while you're at it, press that bell icon for the latest notifications. For regular updates and info, log on to our website at kalkinemedia.com. This has been Holly Shields for Kalkine Media.